if I have an LLC, can't I just use my personal card to pay for everything? Because it's all on my taxes, right? What does it matter, business or personal, or what's the big deal? Why can't they just do it?
Yeah, as Chris Rock would say, you could do it, don't make it a good fucking idea.
You can drive with your feet.
Yeah, that's it. Yeah, you can drive with your feet, it don't make it a good fucking idea. But to borrow something from him, you can do it, we don't recommend it. And here's why. So we kind of did another video. Why you get an LLC is for asset protection, right? To protect you from your customers, from lawsuits, right? To protect yourself. Now, if you start using your personal card, your business card, if you just start what's called commingling, using business and personal cards or funds together, you can have what's called piercing the corporate veil. Now, what does that mean? It means that a judge, if you were to go to court, or lawyer, or whoever, would look at that and say, well, yeah, this person got the LLC, but they're treating it like their personal ATM. They're buying their kids' groceries on here. They're, they're buying ice cream for kids. Sometimes it's business, sometimes it's personal. The judge would look at that and be like, yeah, you're not even using it. So the LLC is all null and void, and you're wide open. And we don't want to do that. So that's one big reason. Another one, kind of like we said otherwise, if you're mixing business and personal into your accounts, we can't give you a proper tax plan. For example, we tell people to switch to the S Corp around like $50,000 in profit. But if your books in there are missing a bunch of expenses, and it looks like, oh, you're at 50, but then we get the actual tax returns like, oh shit, there was like 30,000 of expenses we missed. We could kill your business because now we've just given you all these fees of like payroll, bookkeeping, QuickBooks, all this stuff, and we're like, yeah, that wasn't right. So when we meet with clients, we're pretty strict about this. We need your last tax return, we need your P&L and your balance sheet, because we need to know where you are, right? Because if we give you the wrong information, it would kill you, just like a surgeon would. If they offered to do surgery on you because you called and said my foot hurt, you could get killed.
So you mentioned piercing the corporate veil, and a judge or a lawyer or the tax man can kind of like open you up. What do you mean by that? Like open you up in what way?
I'll use an example. So if you own a rental property, right, or Airbnb, people like to party there. If you have an Airbnb, don't do that. But
yeah, that's probably breaking the contract with Airbnb. Don't do that.
Most likely. But let's say your LLC has this Airbnb property and the tenant throws a party when they're not supposed to, right? And at this party, somebody tries to jump in the pool, completely misses, cracks their head open. If your LLC that owns this has been like buying Lamborghinis, buying Porsches, like just doing something blatantly not business.
Personal stuff, yeah.
Personal stuff. And this family sues you because you've provided an unsafe Airbnb, they could now come after you personally because the judge is going to say, well, you're not even using this asset protection correctly. And the reason why you got this is so somebody could only take that house. But now, since you have pierced it, they could take the Porsches that you're buying. They could come after like different retirement accounts. They can go after you outside of your business, which is the exact reason why you got this LLC.
So the corporate veil, almost like a line of demarcation or like separation.
It's a line, yeah.
So okay, so that's what you mean. So in this scenario, to make sure I understand everything, the LLC owns this Airbnb, right? It rents it to somebody who they broke the rules.
Yep.
But still, as the business owner, I'm liable because I guess I don't own it, but like I'm renting the property out to somebody. Yeah. I'm the business, so I'm liable on the premises, basically.
Yep.
Okay, so with the LLC, let's say in the perfect world, we're doing everything right.
Yep.
Business is business, personal is personal. In that scenario, the dude had way too many Tito's shots, cracks his head open, like you said. The family sues you. In the perfect world where the business owner did everything right, they're okay. It's just that the business can get sued or audited.
Exactly. The business can get sued. So, for example, most people that own rental properties, they also own like other stuff. They own other businesses, they own other cars, like other assets. In that scenario, that family could only basically come after that property. They couldn't also then come after you and say, well, I need your car that you own.
Because those are separate.
Correct, because it's a separate entity. But if you're mixing them,
and that's
because they're like, well, if you're mixing that, what else aren't you mixing? And
okay.
basically, It's when I say open you up. If you're driving around with weed in your car, and they smell it, now it gives the cops like, well, maybe we should impound it, and then maybe we should make you do this, and maybe we should make you that.
Gotcha.
But if they don't smell it, they're just gonna give you the ticket. But now all of a sudden that you have weed in the car or you're mixing, it's like, let's see what else they're mixing too. And you just, even if you can win, you don't want to do that. You don't want to go to court. You don't even want to. Nobody wants to go to court. So like, we want to make sure we're doing things right from the top.
Gotcha. That makes a lot of sense then. And so one thing in terms of business is business, personal is personal. I'm the business owner. I'm not the accountant like you. How do I know if it's business or if it's personal? So for example, now obviously, you know, the office we're renting and filming in, obviously business. But for example, like my cell phone bill, like how would I even know, or my car that I drive for work all the time, or I bought some like a cord to charge my iPad. Like how do I know what's business and what's personal?
Yeah. So some of that is you're going to kind of go off feel. Some of it's kind of common sense. But I'll give an example for a cell phone. So I have one cell phone. I use it for work and business and personal. An easy way is like when I'm working 8 hours a day, like if I'm using my cell phone, it's most likely business. So I would look, if I'm working, let's say 40 to 50 hours a week, right? I look at that. And then I look at how much time I'm actually awake. Let's just assume 14 hours a day. I would multiply 14 by 7, divide that by 40 hours of work, and I would say, oh, it's probably 50%. So then I know 50% of my phone bill is deductible. Again, it's kind of the easy way to do it. With a car, if you're driving from a work location to a work location, that's deductible. I mean, we'll have future videos on that, how to determine what is what. Another way to, I had a client that would ask me like, well, some stuff's personal, some stuff's business. The more mental gymnastics you have to do to justify the business expense, the least likely it's going to be
that makes
to be
sense.
deductible. Like this one example was this client said, I have a gym membership, I go to Lifetime Fitness, I pay $100 a month, real expensive. I need that because going to the gym makes me feel good. You know, and if I feel good, I can perform better in my business. And I said, that's a lot of mental gymnastics to justify that. If that's the case, if we're going to go down that route, then that means toilet paper is deductible. Why? Because I have to go to the bathroom, and if I don't go to the bathroom, I can't work. And if I don't go to the bathroom, I'll get sick, and then I can't work. There's a lot of mental gymnastics.
I mean, if that's the point, JT, can I just write off my entire life?
Yeah.
Can I just all my clothes that I'm wearing, everything?
Yeah, because if you don't have clothes, you're going to get arrested for indecent exposure. And if you get arrested for indecent exposure, I can't work.
Yeah. Now, obviously, we're going off the rails and getting a little sarcastic. But the point is, and to bring it back around is a business owner, right? Yep. My job is to run my business. Mm-hmm. It's not to play detective on QuickBooks. It's not to hit enter on whatever tax software or whatever. You know, that's for the accountant. That's for the CPA. That's for my strategist. So as a business owner, I get that, you know, oh, how does it feel? Business or personal? That works for me. How much should I worry? And what I mean by that is, I'm going to break character for a second. So now, working here with you, right, I get emails from clients that say like, oh, I lost this one receipt. Like, do I need to freak out? No. Yeah. Because whatever the potential deduction is, $1, $5, like that shouldn't break the bank for the business or for yourself personally or whatever. So that's an example that I've dealt with clients. Mm-hmm. From your perspective, how worried should somebody be about missing a receipt or about possibly piercing the corporate veil without a receipt or not just a receipt, without a documentation of any kind? Like, how worried should someone be?
Not that worried because, like you said, if it's a $5 office supplies receipt, IRS isn't going to care. I would be more worried about bigger purchases. And when I say bigger purchases, I mean like anything really over like probably $1,000. And it's going to be like big things, you know, like equipment. And most of us buy things on Amazon anyway, online. Like we could, if the IRS audited us, we could probably pull a receipt like pretty easily.
That's true,
for the most part. You know, a lot of us have credit card statements. Now that does not mean that I'm saying, oh, screw it, like I'm gonna not keep any receipts because JT said I could pull them. No. You still want to have them, and
Especially not
Yeah.
because the IRS, if I
Yeah.
remember correctly,
Yeah.
does not always accept bank statements as valid.
No, they sometimes they do, sometimes they depends on the agent. Generally, they don't. The reason is that a lot of things are ambiguous. For example, like we just said, Amazon. That could literally be anything. Like I think we bought this light that you guys can't see, but bought that. Like we bought that at Amazon, but most people use Amazon personally. Like that could be food, it could be equipment. Like you have no idea. So you do still have to have a receipt, and also too, like you want to know where you are. You're the captain of your ship. Nobody's going to care about your business as much as you do. I love all my clients, but it's up to them. Like I can't care about their business more than they care about it themselves. The same thing as you. Nobody's going to care about your ship as much as you do. So don't look at it as just compliance. Look at it as a tool. Like we said, we used it from another guy.
No, we stole it. You can say it.
Yeah. If you're listening, Mike Glaspie, we got this from you. There's a 3 C's for your financials. It's cash out.
No, in order. Clarity.
Clarity, confidence, cash out. If you're going to come to me as an accountant and say, hey, I want to save all these taxes, we're going to ask you, where are you? I.e., how much money do you make? And that's going to depend on like what advice we give you. Like one of the examples we used was an S Corp. When you're generally at $50,000 mark, we're going to say, hey, it's time to switch. And we're going to ask, where are you? If you're like, I don't know, I think I made like $5,000 last year, or you don't know, we could kill your business because while, yeah, we're going to save all this money, we just added a lot of compliance cost to you. And that could kill your business. And it's like, ooh, like, we don't want that. So again, we want to make sure that you're clear, and that's why you want to have numbers.
Makes sense to me. So guys, kind of moral of the story, have good numbers, do everything on the business card. Business is business, personal is personal.
Yep.
And you'll be golden with the IRS pretty much.
Yeah, you'll be golden with us too, because we want you guys to be safe. We want you guys to be secure. And at the end of the day, like we said, it's your business. Nobody's going to be the captain of your ship unless you are.
Yep. So captains of the ship, when you need tax advice, JT, how do they find you? How do they get help from us?
First, you're going to subscribe to the channel. Click that red button and hit subscribe. We need all of them.
Every single one of them. All 7 billion people on the planet.
Yeah, and if somebody else is giving away subscribers, we'll take them. Next is you want to click the link. It's going to be somewhere in this video here, maybe on one of these plans. And click the link, and then somebody on our team, they'll get in touch with you, and hopefully we'll get you going in the right direction.
Cool. JT Pells, the tax quarterback. Thank you.